guys, I'm here to show you about my stock account and the market updates today. Today, United Natural Gas closed up 1.62%, and the SQQ closed up 2.65%. The market generally closed lower today. Dow Jones Industrial Average closed down 0.45%, Nasdaq Composite closed down 0.79%, and S&P 500 closed down 0.42%. Today, the drug manufacturers overall closed up more than 2.7%, and biotech closed up 5.6%, whereas medical devices closed down 2.4%. The long crude oil positions hit their highest level since the Ukraine crisis, and the climate became uncertain. International oil prices recently rose for 6 consecutive weeks to a 4-month high, and hedge funds that had previously lost money turned into wins. Markets are betting that oil prices continue to rise, with long positions in crude oil now at their highest level since the Ukraine crisis. From a fundamental supply and demand perspective, analysts believe that oil prices supply will continue to reduce as OPEC Plus, composed of OPEC and non-OPEC oil producers, continue to reduce production, continuing to push up oil prices, and climate factors, namely whether record high temperatures will cause hurricanes to sweep through the Gulf of Mexico, affects the refinery production, and became one of uncertain factors for oil prices. Oil prices hit new highs. Hedge funds turned a profit. As of last week, both Brent crude future and WTI crude future prices has risen for 6 consecutive weeks to a new high since April, since the longest winning streak in more than a year. After a slight correction on Monday, oil continued to climb on Tuesday. A person in charge of the crude oil data platform told reporters that the current round of international oil prices may start due to the improvement of supply and demand. On the supply side, Saudi Arabia and Russia respectively fulfilled their production reduction commitments. U.S. refineries stopped production, and European refineries also reduced production due to extreme high temperatures, which tightened the global crude oil daily production. On the demand side, the Northern Hemisphere is in the peak of season of crude oil consumption for summer travel, and the energy demand in Europe and the U.S. is high. Moreover, the market bets that the Fed's interest rate hike cycle is coming to an end has weakened the dollar, which also helped the price of dollar-denominated crude oil futures rebound. In addition, institutional investors, including commodity trading advisors (CTA) funds, have increased their long positions in crude oil futures, which also technically push up the oil prices. The Platts survey shows that OPEC Plus crude oil production in July was cut to a near 2-year low due to Saudi Arabia's major voluntary reduction effects. The 13 OPEC members produced 27.34 million barrels per day, while Russia and 8 other allies produced 13.06 million barrels per day, totaling 40.4 million barrels, and the group's lowest level since August 2021. And by betting the right direction, according to Societe Generale, the Energy Fund has reversed its post-March bank crisis. As Aspect Capital, a CTA fund with approximately $8 billion under management, considers oil and gas futures to be one of the best-performing energy assets in its diversified fund portfolio. According to Societe Generale, the fund recorded an overall gain of 4% in the past year ending of June. Not only CDAs, but also actively managed energy funds. According to a report from Barclays, the core commodity management fund saw an increase of more than 8% in July. Elliot Geller, partner of Core Commodity Management, said gasoline has been the best performing oil and gas commodity sector so far this year. From now, hedge funds continue to be bullish on prices. The best of these institutions are indeed supported by the supply and demand level. On the supply side, both Saudi Arabia and Russia cut the production last week, with an additional 1 million barrels per day extending until September. Russia voluntarily cut exports by an additional 300,000 barrels per day in September. UBS analysts wrote that the oil supply is expected to remain high in the coming weeks, given the tension of Saudi Arabia and Russian-led production and export reduction programs. The oil market will see a shortfall of about 2 million barrels per day in July and August, with a shortfall of more than 1.5 million barrels per day in September. On the demand side, Russia's Deputy Prime Minister of Energy said after OPEC Plus ministerial met that global oil consumption could grow by 2.4 million barrels per day this year. UBS expects oil demand to exceed 103 million barrels per day for the first time in August, driven by China, India, Brazil, and the Middle East. Based on this, UBS maintains its bullish outlook in oil prices and predicts that by the end of 2023, oil will rise to $90 per barrel, and in the next few months, oil will fluctuate between $85 to $90 per barrel. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.